Let's get some other developing news now. The latest employment numbers for June are just dropping as we speak. Business editor Ross Greenwood is with us. Ross, the prediction was for no change. What's happened?
It's actually increased a little, Kieran, here. So the unemployment rate has jumped to 4.3%. We'll take you through some of the details, but this is a surprise. It no doubt will impact the markets. We'll take you through that very, very shortly as well. Just trying to bring up some of this information from the Bureau of Statistics, just showing that 4.3% is the unemployment rate. And just to go take you through this, it would appear as though the unemployment rate is broadly increasing at the moment. We'll show you some of the details. The monthly change in unemployed people is just 2,000 people, but the number of unemployed people has increased by 33,000. Now, you might be aware that over a period of time, with very poor economic activity in Australia right now, the economic activity is basically literally 1% per year, which is way below average. It's a situation where many people have forecast that the unemployment rate would ultimately have to increase. But the hope was that with the way in which the inflation rate had been tapered down, that the unemployment rate would not increase to the extent in which it really has now. So, as I say, this is something of a reaction, I think, also to even the federal election. The federal election sees significant numbers of people employed, not just through the Australian Electoral Commission, but through the political parties themselves. And so you can see here that this is really the highest unemployment rate that we have seen for many, many months. It is also perhaps another warning even to the Reserve Bank that it should consider interest rates into the future. But just going through some of the stats here, I can tell you that the participation rate, say for example, that's up. So that's one thing that's important here. The underemployment rate is a little higher, around about 6%, but it's really that number of new jobs being created. And remember, that's one of the focuses that the government has very much had during the election campaign and afterwards as well, is that the strength of employment, the number of new jobs created, has been one of the real hallmarks of this government.
Yeah, indeed. It's been one of the strongest economic signals for the government over the last couple of years, through some tricky times, even questions as to whether the RBA could move on rates while unemployment stayed as low as it has been. What does the government take out of the number today?
Well, I think really we'll hear from the Treasurer, no doubt, in a little while. But it's one of the focuses that it's been the public sector that's been the major employer in Australia over a period of time. Now, effectively, you've heard from the Treasurer and the Prime Minister saying it's time for the private sector to step up. The private sector overwhelmingly is the largest employer in Australia. Now, as the government tries to cut back to try and get its budget back into better shape, really it's a situation where you might find that there's a lag and this unemployment rate might start to rise. And maybe we're seeing the start of that now. As I say, part of it might be a reaction to the employment that was created during the election campaign. But my sense is, over a period of time, if the government starts to drop out of employing public servants and employing other people associated with government policy, which is childcare, which is aged care, which is the NDIS, then you might start to see that the private sector is not fast enough in picking up those employees. And I get a sense that that's what we're seeing right now.
Yeah, and certainly there's nothing in here that would stop the RBA from moving at its next meeting in terms of cutting rates again. How about the money markets? Have they reacted to all of this?
Yeah, let me show you this, because I want to go take you through the markets, because I sense, without having seen it myself, that there will be something of a market reaction. So let's take you through those numbers and just show you what it looks like. The ASX 200, have a look at that. You can see that jump there at the very right-hand side. The market now up 0.7%. That is after these numbers have dropped, this unemployment rate at 4.3%. So in other words, the odds of an interest rate cut become greater. So as a result, the stock market goes higher. As a result, if we go further forward, we should see the Aussie dollar fall off the back of this. Let's see what's happened. This is the odds of a rate cut. Before this, the odds of a rate cut were 77%, and afterwards the odds of a rate cut are now 87%. This is in August. So in other words, the money markets already are showing that the odds of a rate cut in August are much higher after this unemployment rate has dropped. If we go and have a look at the Aussie dollar now, the Australian dollar, we should be able able to see a drop in the Aussie dollar. Yep, down 0.5% since then. It had been above 65 US cents, now below 65 US cents off the back of this. The other one we can show you, I think, is the one-year bond yield. Have a look at this. So that's the other thing that's happened, and you can see that's happened at 11:30 as this number dropped. So the bond yield has dropped rather sharply on money markets, so interest rates are lower. So the markets is now suggesting that really August is very much alive for a rate cut off the back of these weaker than expected employment numbers.
Ross, appreciate it as always. Thanks.